Hello, you're watching ET Markets Live. Welcome to a brand new episode of ET Commodity Talk, where we discuss gold, silver, and much more. I'm Neha Vashisht. Joining me today is Naveen Mathur, Director, Commodities and Currencies at Anand Rathi Shares and Stock Brokers. Thank you so much, Naveen, for taking out time and joining us today on ET Markets Live.
Thank you very much, Leah. Always a pleasure meeting you and to present our views on this show.
Well, same here. Let's quickly start our session for today and let's start with gold and silver. So, gold and silver held key support levels last week despite a strong dollar index. Do you think this signals strong underlying demand from central banks as of now, or are we seeing temporary buying at lower levels?
Neha, I think the sustaining prices of gold in dollar terms, particularly at around 3,300 plus, currently we are
Hmm.
seeing the prices of around $3,400 levels, is sustaining for a very good reason, as you rightly said, in spite that the dollar is getting stronger. Inverse
Hmm.
correlation should bring the dollar denominated prices of gold on the decline, but that's not happening. There are a couple of fundamental factors. One is the Q1 and Q2 buying in the calendar year of this year has been a
Hmm.
very, very strong central bank buying across the world. All major central banks are looking forward to buying gold, particularly the emerging markets banks, the central banks from the emerging markets. They are seeking diversification away from the dollar. So, all
Right.
this plus the geopolitics, the tensions continuing in the Middle East, we are not seeing despite the talks in terms of peace talks and everything being talked about. So all those things are making the life little difficult for the global economy. Plus, the tariff uncertainty is still continuing. So all these reasons are very good reasons for people to be risk averse. There are only two things which can be risk averse, so to say. In the currency markets, you have the dollar index, and therefore a kind of a stronger dollar we are seeing over the last couple of days. The second part is bullion, and within bullion, gold performs a very strong risk averse asset class. So therefore, it is holding back at around
Hmm.
3,300, 3,400 levels. So I think the Fed policy would be the cue going further. Looks like that the Fed would be dovish, cutting down interest rates, the federal rate. The economy numbers are pretty good, but still there are certain numbers which are not as per the expectation. The US economy should be looking forward to. So I think there are possibilities of the rate cuts going
Hmm.
further in the second half of this calendar year. And that would make the dollar index depreciative, and which again might boost the prices of gold. But all these factors are leading up and sustaining the prices above $3,300 levels.
Hmm. Right. Let's also talk about dollar index. So dollar index right now is steady but is under a lot of pressure. It has slipped from its highs as well. How much impact do you see this volatility having on bullion prices in the near term?
Neha, dollar is one of the major fundamental factors. I mean, the currency markets, the way they behave, are very important, and particularly dollar in this case, because in case of
Hmm.
gold or any other dollar denominated commodity, the dollar prices against the dollar index per se is very critical for the
Hmm.
movement. Apart from that, as I mentioned earlier, geopolitical tensions, economic strains on the global economy, the Federal Reserve policy, the central bank's monetary policy, all those things, the demand and supply dynamics, all those matter. But predominantly these days, the moves are largely because of the currency and other geopolitical factors, because of which the prices trends are
Hmm.
taking shape. I would say the current movement on the dollar index would be choppy. It is not very strong trending either sides on the up or the downside. This is making bullion kind of little sensitive to the day-to-day swings. But I would say we are not locked into a particular price range for the dollar index
Hmm.
decisively. And other underlying factors are definitely the central bank demand, the geopolitical tensions, the real interest rates. But it is playing a very critical role. It is very difficult to judge the range of the dollar index as of now.
Hmm.
Uh, I would
Right.
say holding at around 100, kind of 104, 103 on the upside, and the downside at around 98 would be something. A broad range, so to say, because it is very news driven, very much driven with respect to the tariff talks across the world, very much
Hmm.
driven by how the geopolitics in the Middle East is panning out. Russia Ukraine is still kind of not on the peace talks, although they are talking about that they will hold the peace talks next week sometime in Turkey. So all these things, the ETF flows and everything would actually lead to the trend on the prices. But I would say dollar index definitely would be choppy, not
Hmm.
volatile, but choppy with the day-to-day swings.
All right. So we've talked about gold and dollar index. Let's briefly talk about gold in terms of a breakout. What are the technical indicators are you watching closely to confirm a breakout or maybe a further consolidation in the coming sessions? Just briefly.
Okay, so Neha, $3,400 on COMEX currently per
Hmm.
troy ounce. We see the first support level at around 3,370, and the downside further from there would be 3,353. The resistance on
Hmm.
the upside is 3,488 in dollar terms. And if it breaks that particular level, then it might be 3,511. Bullishness continues to be at 3,500 levels, but then we are holding at around, as I mentioned, 3,400 levels. In Indian markets,
Hmm.
on the MCX, we are seeing prices at around 99,150. That's future. I'm talking about on MCX for the month of August. The first
Hmm.
support looks like to be at around 98,700, and the next one would be 97,800. The resistance on the upside is 99,400, and 99,850 would be the second resistance level.
All right. Let's now talk about silver. So, silver has jumped around 30% in 2025 so far. What should retail investors keep in mind before jumping into silver at these levels?
Very dynamic commodity in here. And I always
Hmm.
keep saying about it. It takes both the bullion and the industrial metal into account. Silver is used 60% or 55% of silver consumption is largely coming in from the industrial use, and the rest is kind
Hmm.
of bullion, artifacts, etc., etc. Therefore, in times of adversity, it does take kind of bullion trend. Being part of the bullion category, it takes gold as a, as a driver for us. I won't say safe haven demand, but a bullion
Hmm.
demand for kind of holding up. But if the industrial consumption goes up and the economy starts performing well, then also it is a positive trend for silver. I would say it's choppy, although it's kind of near highs, all time highs. It's hovering at around 114, it touched 117, 18 levels previously.
Hmm.
I think if you see the ratio, gold silver ratio, also it is looking positive. But all said and done, Neha, I would say for a investor with a risk appetite, silver can be one of the option between
Hmm.
gold and silver. But if you're looking forward from the return demand portfolio diversifier,
Hmm.
hedge against the uncertainty on the equity, the risk assets, I would say gold is anytime the only asset to be looked into. As far as the returns are concerned this year, calendar year, 6 months or so, we have seen the
Hmm.
gold has given better returns, Neha, than silver. Uh, uh,
Yeah.
uh, but I would say that it depends upon the profile. Means if you are very risk averse kind of a person and you want to be part of the bullion, gold would be better as a
Mm,
diversifier. And you have many options now. You have ETFs, you can buy physical coins, etc., etc. So even in silver, you have ETFs now.
yeah.
So as far as the financial instruments are concerned, you have a variety of them for having gold and silver in your basket of portfolio. But I would recommend it depends upon largely the risk appetite. It's very volatile. Silver has been very volatile over the course of many years. So I would say if
Mm,
you understand it well, then you must go. But even if you want to go ahead, basis your appetite, I won't say
mm,
to go one shot, go staggered, do it kind of SIP in silver ETF, or buy physical monthly as per what you think right for you. So I would recommend go staggered. Even if you want to go for gold, go staggered
mm.
rather than doing it one shot.
All right. And a lot of brokerages are also saying that silver could actually hit 2 lakh per kg mark by 2026. But what is your suggestion too? Because a lot of investors see these updates and suggestions, so they get a little carried away when it comes to silver
I
and
think
gold. So
I
what is your
think
suggestion?
I think I've been in the markets, Neha, from the last so many years.
Mm,
2021 when silver, also 2011 when silver was touching high every day, 77, 78,000. In 2011, I'm talking about people were talking about that it'll
mm,
cross a lakh. It crossed lakh a kg in 2025. So 14 years
mm,
down the line. So I would say that just don't be carried away. Means people would say लाख हो गया तो 2 लाख हो जाएगा, 2 लाख हो गया तो 3 लाख हो जाएगा. uh,
mm.
these are just talks. Means you need to understand the real fundamentals. Means economies are
Right.
not doing well, Neha. The global economy, the projections, the IMF projections for the global economy, the emerging economies is not very great. Means we are not on the uptrend as far as the GDP numbers are concerned. People in the industry, the private sector is waiting and watching as to how the things, the macroeconomics take shape. So
Mm,
and since it is a majorly an industrial metal, I would
yeah.
say you should be little concerned with respect to what people say. Use full understanding to think about both the demand supply, the currency dynamics. It is a
Mm,
deficit. I mean, silver without saying 5 year continuous deficit numbers
yeah.
in terms of production and supply. So I would say being deficit, what you are seeing is something plus the currency, plus the bullion factor, the safe bullion factor. Otherwise, I don't see any reason for silver to go beyond 125 or so. Means fundamentally, honestly, if you
Mm,
really ask me, where we sit today, except for the deficit, uncertainty, geopolitics, all the currency factor, all those factors leading up it to 120, 117 and highs. But I don't
okay.
see 125 something beyond immediately, at least in next. If something bad happens, then maybe. But from the
Hmm.
industrial side, which is largely an industrial metal, I don't see it that way, honestly.
All right. All right. So now let's talk about rupee. So on the forex side, INR crossed 86 mark again. It's above 86 mark. Do you think
Mm,
rising geopolitical risks could lead to further rupee weakness in the coming time?
Uh, I would say rupee would be very range. I won't. I don't see too much of volatility in rupee currently as situation
Mm,
stands. The geopolitics definitely putting pressure on the rupee. The USD INR did moved beyond 86,
mm,
reflecting a stronger dollar and global investors looking forward for safer assets due to rising concerns regarding trade wars, possible sanctions, NATO words, all those things. But I would say between 85 to 86, 86 and a half would be what the rupee would be now. A more or less trending between broad range between 85.50 to 86.50 would be something. We
Mm,
are very fundamentally, Neha, we are very strong. Means our numbers, the macroeconomic numbers are very strong. The GDP growth is expected to be one of the best, I would say, in the emerging markets, or I would say developing markets. So we our monetary policy, very prudent monetary policy. Our macroeconomic numbers are, as I mentioned, very strong. The fiscal deficit is very contained. So I would say that the current account deficit is contained. So I would say
mm,
India is a bright spot. Although whatever we are seeing is relative to the global economy, the currency factor. But as far as India is concerned, if you really ask me today, leaving
mm.
aside whatever we are seeing on the global side or the global world, the rupee should be at around 82, 83 levels, minus
Okay.
all those noises because of the global world. So that's my view.
All right. All right. So let's move to the last leg of our session. Let's talk about ECB policy meeting and US manufacturing data, which is lined up for this week. What macroeconomic triggers you think could cause the biggest, shakeup in gold, silver, and dollar index, and what can we expect this week?
Okay, so ECB meeting, a dovish stance should surprise the market and may
Mm,
weaken the euro and lift the dollar further, pressuring the commodities, the dollar denominated commodities, and particularly, I would say, the bullion. The markets expect no change per se, with
mm,
just 2.15% chance of a rate cut. So you don't see much from the ECB meeting. The people are neutral about where we stand today. The
mm,
geopolitical risks continue to escalate, and those tensions or the NATO sanctions, what we are talking about, could be an issue for a safe haven flow coming into gold and
mm,
silver, even if the dollar remains firm. We have the US manufacturing data, which is coming up. The flash PMI is forecasted
mm,
at around is a forecast at around 52.9 levels. A stronger print may
right.
boost the dollar and therefore would weigh on the gold and silver prices.
All right. Well, this marks the end of our segment for today. Thank you so much, Mr. Naveen, for joining us today on ET Markets Live.
Thank you very much, Neha. Always a pleasure to have conversation with you. Thank you.
Thank you so much. Same here. Thank you, everyone, for joining us today.